We see the flows. We're going to show the flows to the audience in just a minute. But when you're talking to investors, when you're talking to people that are thinking about investing in your fund or other funds, what are the questions that you're getting one weekend?
So it's been really interesting, actually. The questions are somewhat different than I originally expected. I think you're seeing a lot of people be highly interested in infrastructure in a way I didn't expect, which is great. Really digging into sort of the guts of how these products work. I think there's a bit of a misconception that all these products are completely alike. I think there's been a significant amount of sort of research and due diligence that's going on. We're still very early in this process. For example, for advisors, for platforms, they're still going through the process of figuring out which products they're going to offer to their clients, how they're going to offer those products to their clients, how they're going to advise clients on this space, how they're planning to get smart on it. And I think it's still unbelievably early in the lifetime of these products.
Right. We were just showing the fund flows. Your fund over the last week's had about $250 million of inflows. That's according to the latest data from CoinShares. Are you surprised by that number? Is it higher than you thought, lower than you thought? Did you think people would just start pouring money into this because there's been so much talk about it?
So I think this is, in some respects, I think more excitement for these products than I would have initially expected. It's certainly way more than you would see for any kind of regular ETF launch in the US or elsewhere. I think the numbers we're seeing are on par with what you would expect potentially with a first year or two of an ETF's lives, not less than the first week.
Okay.
I think the reason for that is partially pent-up demand, partially I think you're also seeing the result of a 10-year process to get these products to market.
Okay.
Not just our product, but if you're looking at that $2 billion across those products that were all launched on the same day, that's an amazingly robust number.
That's fair.
And not something you would expect.
That is fair. It's a number of thematic ETFs all released on the same day. But I do want to kind of talk to you about that and some questions about volatility. Here at CNBC, I have the fortune of talking to a lot of financial advisors. And a lot of people are worried about the volatility of your ETFs, of course, of Bitcoin itself. It's a pretty volatile asset class. But I want to bounce this off of you. Now, this is according to S3 Partners. Since the start of just this year, crypto stock short sellers, they've made $1.78 billion. They're up 27% this year. Are you worried about volatility and the fact that these thematic ETFs for Bitcoin, they're coming out really at the top of the market? And we've seen other thematic ETFs that are issued at the top of the market have trouble. I mean, the cannabis ETF, I think, is a great example.
The short answer is no. I think if you look at the history of investing in Bitcoin as an asset, it has a tendency to be a time, not necessarily a timing issue. These assets do perform quite well on a long-term buy and hold basis as part of a balanced portfolio, and are quite impactful to portfolios on a risk-adjusted return basis. And so I think it's an interesting moment in crypto because this is a bit of a change in terms of mainstream adoption, and we're moving from an asset that didn't really need to be discussed regularly as part of a mainstream conversation about finance. I think that has shifted over the last couple of years, and the advent of these products is going to essentially push us into a world where people need to have an opinion here, and I think that's going to change the dynamics.
Speaking of opinion and speaking of the established financial system, I want to play some sound from Jamie Dimon in Davos yesterday, just for the audience. We put a bleep in there. I know some people heard some cuss words in there yesterday. I want to bounce this off you. I want to get your reaction.
What do you think of there's about a dozen big financial companies, Fidelity included.
Number one, I don't care. So just please stop talking about this. And I don't know what he would say about blockchain versus currencies that do something versus Bitcoin that does nothing. It may be that not different than me. But, this is what makes a market. People have opinions. This is the last time I'm ever going to state my opinion.
So, Ophelia, your reaction, I think it's pretty obvious the word we bleeped out there, but the theme of what he was saying, I think, is pretty clear.
I think it's not for everybody. It's not going to make sense for everyone's portfolio, but I think if you look at the history of how this asset class has performed, the benefits it can provide to portfolios, it does have a place in this conversation. I think that's been fairly well established. We've seen quite a large number of financial firms come around on these topics. JP Morgan runs a very significant and quite interesting tokenization platform and blockchain projects within their firm, and that they're quite large proponents of the technology. If he doesn't love Bitcoin, I don't know
Okay.
that necessarily matters all that much.